The Workers' Comp Experience Rating Mod, or EMOD. Don't know it? Don't understand it? Don't know how it works? This can lead to real trouble for any business owner with heavy workers' comp premiums and lead to higher costs for a long period of time. Hi, I'm Coyle. Welcome to my channel where I talk about all sorts of issues surrounding insurance and risk for business owners. Today I'm going to take a dive into the Experience Rating Mod and explain what this factor in your workers' comp policy is, how it works, and why you need to understand it so you don't get hammered by your workers' compensation insurance policy. I'm also going to give you a few of the biggest mistakes that decision makers like you make when it comes to the EMOD and how you can avoid them, so stick around to the end of the video to learn that. So, what is an ERM, or Experience Rating Modification? The Experience Rating Modification goes by many names: the mod, the EMOD, the Experience Mod, your ERM, or your Experience Modifier, but they all mean the same thing. It's a rating factor found in your workers' comp policy that either debits your policy for claims experience that is worse than it should be, or credits your policy if your claim experience is better than it should be based on your payroll size and class codes used. How is your ERM, or Experience Mod, determined? Your mod is calculated either by your state workers' compensation rating bureau or the NCCI, which is the National Council of Compensation Insurers. There are 11 state rating bureaus and 39 states which deploy the NCCI model for developing your mod, and all are pretty similar to each other in how they determine your mod. Each employer's mod is unique to them, their loss experience or claim history, payroll, and industry, and it's based on 3 of the last 4 years of these 3 factors: payroll, claims, and industry. Before I forget, can I ask you to hit that like button and subscribe to my channel? That'll help tell the YouTube gods that this is good content and my channel will grow. Thank you. What does experience rating do? Well, the purpose of experience rating is to add a level of fairness to the workers' comp system nationwide. In a general sense, it is there to charge employers who have more claims than expected more, and give a credit to employers who have fewer than expected claims. Why have experience rating modifiers? As I mentioned, the purpose is to add fairness to the system. But more than that, it's a tool used by the insurance industry and the rating bureaus to encourage employers to have safer workplaces so that employees aren't injured. Without the experience rating mod, there would be less incentive for employers to engage in maintaining safe operating practices or to develop safety cultures. In fact, in states like New York, the mod calculation has recently been changed to provide heftier credits and debits for employers on both ends of the spectrum. Employers with no claims are now getting bigger credits, and those with terrible experience are seeing their mods gradually increase beyond prior levels. New York's purpose is to drive safer work environments. I did a video on that, and you can see that here. How does the Experience Mod impact the workers' comp premium? Well, the EMOD impacts the employer's workers' comp premium very directly. In a workers' compensation policy, payroll is multiplied by a rate for each class code, and then totaled up to create something called the standard premium. That standard premium is then multiplied by the Experience Rating Modifier. As an example, let's say your standard premium is $100,000 and your Experience Mod is 0.75, which is a credit mod because you had fewer claims. That means your modified premium will be $75,000. Conversely, say you had terrible claim experience in the past several years and your mod is 1.25. The modified premium you'll pay is $125,000. That's a huge difference from the employer with no claims and illustrates how the system is supposed to work. Pretty basic math. How is the Experience Rating Modifier calculated? That's a good question. It's a fairly complex formula that's carried out by software today. But when I first started in the business, it was done by hand on a worksheet with several rating manuals and a calculator. Back then, it was prone to claims and errors due to the manual nature of the calculation process. Today, errors still occur, but less often. We do recommend having your modifier audited for accuracy every couple of years to make sure you're not overpaying due to an error. How can you impact your rating mod? As I just mentioned, you can audit the mod to find errors that were made in the past and get them corrected, and we can help you with that. But that's looking backwards. How do you impact your mod looking forward? Well, there's a number of things you can do, and most of them focus on safety and culture. The greater leverage you can apply to safety processes and procedures, the fewer claims you'll have. If you need help here, let me know. I often engage with clients on improving safety practices and help getting them on the right track. Next, you can institute a nurse triage system to evaluate each claim that does occur to determine the best course of action and to help control claim costs and outcomes. In many states, there is a dramatic reduction in a claim's impact to the mod if you don't incur lost time, which is time away from work. It may make sense to pay an employee who is injured and unable to work for several days so that you don't get hammered by the mod. But this does take some finesse. Bottom line, claim frequency and severity reduction are fundamentally how you reduce the impact to your mod. Here's the bottom line. The experience rating mod or modifier or E-mod or whatever you call it has a very significant impact on your workers' comp policy costs. I've worked with a lot of employers who have experienced problems with their mod and didn't know where to turn. The good news, as it has always turned out, is that it's never too late to start to work on improving your mod. That may start with a mod audit, a claim history review, a safety audit, or any number of other steps, and breaking it down into manageable chunks to assure that you get projects done and work towards better results. Now, on the flip side of it, if you've got a great modifier now, that's fantastic. But it's important to be real about this. Is your great mod the result of an aggressive safety tactic, or is it the result of good luck? If it's the former, then I recommend engaging in a process of safety management and safety culture development before your luck runs out and your mod hits the skids. Whether you have a great mod or a not so great one, and you need help in looking for a team of dedicated experts to work with you on your experience rating mod and your workers' comp, I'd love an opportunity to speak with you and see if we'd be a good fit for you and your business. Now, let's talk about some common mistakes made by employers and how to avoid them. The most common mistake made by employers, large and small, that I see regularly when we're asked to step into a new client relationship is that no one has been monitoring the claims experience. The employer, the CEO, the CFO, the controller, the HR manager, no one is watching claims. No one really knows how many claims have occurred in the past 4 years, how much has been paid out, how much the claim reserves are, or how to prevent those claims from occurring again. An employer may know or sense that they've had a lot of claims, but there's no solid information being reviewed. This is a huge mistake, and it's easily resolved. You ask your insurance broker for a copy of your loss runs for the past 5 years, and you also ask your broker to sit down with you and explain that report. You should then be strategizing what steps you can take to prevent or to minimize those claims from occurring again in the future. The second most common mistake made relative to the mod is that employers are either buying their workers' compensation insurance directly online without a broker, or they're using the wrong broker. Your insurance broker can be the greatest resource towards reducing claims and your mod. They can be your outsourced risk manager if they have the skills, talent, and tools to do that. When you buy your workers' comp online or even through your payroll provider, you often don't get a lot of support. If you have a mod that's 1.0 or above, you need support. You need the right broker who can be a key resource towards lowering that mod and your costs. Before I close out this rather long video, I want to remind you to please hit that like button. And before you go, here are a couple of other videos that are related that you may find interesting on workers' comp and your experience mod. Thanks.